I could own an asset where the business deals with the employees and all that other BS. And then I own the building and I make as much or more money than they do running their business through the real estate appreciation of the property and tax depreciation. And I can be passive at the same time and collect mailbox money.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pros Show. I'm your host, Erika, and today I'm excited to be joined by Joel Owens. He's been dominating the commercial real estate space. Joel, it's awesome to have you here today.
Thanks.
I think our listeners are going to love hearing how you've built a powerhouse business. So let's jump on in. For our listeners who don't know you yet, give us the rundown. How did you get started in the world of real estate?
So I used to be in the restaurant space, working for a large pizza operator, Domino's Pizza, Mike Orcutt, Cowabunga Incorporated. And I own my own restaurant, not Domino's Pizza, but my own independent. Then I went into real estate and then drove part-time for pizza. And then I had a older gentleman where they're trying to buy his commercial property, looked over the contract for the developer on behalf of my client, the seller, and they said I caught every out in the contract. And so they brought me on to assemble the other pieces of land. It was about 25 acres. It's about 20 parcels. And I worked on that for 2 or 3 years, kind of cut my teeth on commercial real estate. Then when the economic downturn happened, you could buy buildings for cheaper than you could construct. And so I went to sell large apartment buildings. Then I went to retail shopping centers, and then I went into the triple net single tenant space.
That's such a cool journey. Was there a specific moment for you that you knew that triple net properties were going to be your thing?
Yeah, I tried, I had owned some apartment buildings myself and some retail shopping centers, and it just wasn't the kind of life I want. So there's 1,000 ways to make money out there, even in real estate or just, different, professions and everything. So it comes down to more like what makes you happy and what kind of optimal life you want. And so the retail shopping centers required property management and sometimes watching over kind of mom and pop tenants and need more hand holding, and they have more issues that come up. They don't have, capital expenditures for repairs often. So you got to make an agreement with them to extend that out to collect the payments over time. There's just a hassle factor. The same thing with the apartment building, tenants, toilets, termites, trying to get a good property manager in there, dealing with non-paying tenants, that kind of thing. And so that, my natural progression just landed on the single tenant triple net. I was like, I could own an asset where the business deals with the employees and all that other BS. And then I own the building and I make as much or more money than they do running their business through the real estate appreciation of the property and tax depreciation. And I can be passive at the same time and collect mailbox money. And so that was just very attractive to me. And so that's why I just kind of went into the triple net single tenant and never looked back. I do have some clients that
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Buy some retail shopping centers, but I don't really mess with those anymore. I just only do the single tenant thing now. It's a simpler life.
There particular areas in the market that you're excited about right now?
Yeah. So, I call it dirt first. So anytime you're creating value in commercial real estate, it's all about the dirt. People get often hyper focused on, how old's the building and the tenant and the lease term and all that's important, the credit quality of the tenant. But I focus on where's where's the dirt at? Like, where's it sitting at in the market? Is it on a hard corner? Or are there big I call them back acres. They do daily cross feeder traffic to a site. So, as an example, you could have a Chick-fil-A that's at a 4.5 cap and you don't want a 4.5 cap percent return, but right next to it, there's a Starbucks that you could get for 6.5 cap rate. That's right next to the Chick-fil-A. And then the Walmart's behind it. So every day there's cross feeder traffic from people going to the Walmart and the Chick-fil-A that also goes around your site. But your site, you got the higher cap rates, you got a higher cash on cash return, but you still own good dirt. And so I look at, like, you know, if it's a dark Walgreens or it's a dark bank, if I can get it at the right price for the building for less than replacement cost and I get the land too, then I can either ground lease that land or I can re-tenant the existing building, or a tenant could buy the land and the building from me at a profit. My goal typically is to double on the value ideals, a 2x equity multiple in 3 years' time as a minimum. So if someone invests with me, a credit investor invests with me 200,000 to the cash flow and the equity upside of the property within 3 years' time, they're looking to get 400,000 back total as just a target goal as a minimum. And why I like triple net specifically for the people that invest in syndications or credit investors, what happens often, you might have heard of this, there's some credit investors that invested with multifamily syndicators and other asset classes that used a ton of debt and massaged that debt, just to entice investment from those investors to give them a certain pref or cash on cash return. And what they do is by taking on, 65, 75% debt, they boost the returns by maybe 1 or 2% because they know that's what the LP investor is looking for to invest in those multifamily properties. But the problem is the interest rates almost doubled and the rent didn't go up high enough. And so now they're having capital calls and they're bleeding cash flow and they're not distributing anything to their LP investors. And so a lot of people have lost a lot of money with these syndicators that use debt. The other thing is on the exit, when you go to sell, say, a $50 or $80 million apartment building, the buyer is not paying cash. They're using debt. And so if you can't time that debt market cycle properly, when you got to exit and your loans due, you're in a world of hurt. Either get a refi, do a capital call with investors. What I love about triple net is there's always some retirees, no matter whatever the economic cycle is. Typically 4 million and below, about 70% of them pay cash. They're always like, we'll pay a low cap rate. Like, even if the interest rate's like 6, stuff's still trading at a 6.5 cap because most of them pay cash and they don't care about the interest rate. And so that's why I love these properties. When I reposition them, there's always a buyer, no matter the economic cycle, to buy these properties and make a profit on them. And that's why I love the space.
Yeah, absolutely. And it really shows that you love it because, you help other people find properties, whether that's directly or through your syndication. How do you, keep all those plates spinning, balancing all those deals and keeping profitability with yourself too?
Yeah. So
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, I used to be mainly, I'm a principal broker, I own my own company, so I don't work for a company. It's my company. And I've stayed as a buyer specialist for decades. And so in the triple net space, that's kind of rare. So people at my level that have closed the volume that I have, not with a team, just as an individual on the buyer side, there's maybe a handful of us in the country on the buyer side. There's not that many of us that, typically what happens is if you're a buyer, even if we're 10, $20 million, you see a property you like, you call up the giant corporations, they have three people on a team, the director, senior director, and then they have the junior agent. They make the junior agent do all the grunt work, answer the calls from the buyers because they don't make any money off the stuff they sell. Like I have friends that are senior directors and they might sell hundreds of properties a year, but they take reduced commissions to sell big portfolios. And so, and then half of that commission then goes to the parent company. So they might sell hundreds of properties, but they only make maybe 8 or 900,000 for themselves as a senior director. Whereas I get to keep it all. I could do a dozen deals a year and make a couple $1,000,000 for myself on the broker side because it's my company. I get to keep it all. It's just me, you know. And so I'm wealthy, and so I can sit there and I can tell you what I really think about a property. They're just pushing whatever's in their listing inventory that the seller's giving them to sell. The developer, the REIT, pension fund, the insurance company said, sell this, get it off our portfolio. It could be a mediocre to crap property. They want to answer no questions for the buyer. They want to slam them in. And then if it falls out in 4 weeks, they want to slam another buyer in because it's a volume game to them. They don't have time to deal with buyers one-on-one. Me, I'm different. I do so many deals a year. If I have a client that's worth 10 million or whatever it is, I can spend the time with them. They're an expert in their field, but they don't know anything about triple net. I wrote a book on triple net and I have, tons of information out there for people to review. And then I walk them through the process. Like it's not like I just hand them off. When we're under contract, I'm reviewing the PSA, I'm reviewing the lease, I'm reviewing everything alongside the attorney, commercial mortgage loan, capital markets broker, everything. And then even post closing, when they want to decide if they want to sell in a couple of years and 1031 exchange into something else, or they want to acquire another property, I'm there with them through that whole process. So I view it more as a relationship long term than a transaction. So that's why I'm picky as to who I want to bring into my inner circle because I've got existing clients. And it's like I really want syndicator, accredited investors. I want to invest them in the syndication side or own direct. I really want them to value that relationship. I'm not looking for someone that's like, hey, I got 25,000. I want to put it on 40 different syndicators and put some tiny amount. That's not the person I'm looking for. I'm looking for, ones like for triple net, you're my triple net guy for my syndication investments. I want to put in, 200,000, 500,000, a million at a time, and just keep growing with you and buy on direct. Those are the types of clients that I work with. And the other thing about triple net too, that people don't understand, I always make this analogy. When you're in the residential space and you might flip houses or you've owned 10 or 20 property rentals and maybe you make 100, 200,000 a year, maybe your net worth is 2 or 3 million bucks. Um, in this residential space, you might be considered like a big fish, right? But when you get into commercial, that's like the beginning, right? You're like a minnow swimming among the megalodons, like a $2 million triple net property is equivalent to like a $200,000 house, in residential is kind of how I tell people, so that they understand it. So typically to find something good, you need to be in a strong suburban area. You need to be about 2.5 million and up in price, putting about 35% down. And the difference with me is since I'm a specialist, you work exclusively with me. I'm looking for the off-market properties, the pre-market properties. I'm looking everywhere for the diamond properties. I don't have a mandate from a seller to just sell some crap, to get more listings again.
So what's that process like for you when you're looking for these deals? Do you have a system in place that helps you with that?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah. So, what happens typically is someone goes to my website, the NNNinvest.com. They click Start Today. They fill out the form. Uh, they tell me their liquidity and their net worth. I get them with my capital markets mortgage broker if they want to use debt. If they're paying cash, I don't do that. He pre-qualifies them for free. And then at that point, we set up a phone call. I talk to them about their specific goals. And then I discuss theory versus reality. They might have seen a little blip of something about triple net and might have it in their mind that they can find this and buy this at this and make this return and everything. And I'm the one that's been doing it 21 years and sold $1 billion worth of it. And I'm the one that knows the realities of it and each price point and in each state and each market for the credit quality and how much debt you can get on it. I already know all this stuff. I used to a bunch of years ago. I had software where you punch in all this stuff and it tells you the cash on cash and all this stuff. It's all in my brain now. I can just do it in like 5 seconds. I can just tell you what it's going to be and if you're realistic or not. And so that's why I have that call with them. And then after that call, they see my exclusive buyer agreements for 6 months, only related to triple net properties only. They work with me exclusively. And then from that point on, depending on if they have a 1031 exchange, we talk about timing. So if you have a 1031 exchange, a triple net seller is typically only going to want to deal with you if you're under contract to sell your property and the buyer's gone non-refundable with their money and past contingency and they're checking out the closing, or if you're in the 45-day ID period. They're not going to go under contract with you if you just put your property on the market for sale, or if it just went under contract and your buyer can still back out, because they don't want to tie up their property on the triple net side. So what I do is what I call is a soft search. So I often tell my 1031 clients, what we need to do is build in a 30-day extension period after your buyer goes hard with their earnest money on the property you're selling so that you have more time in addition to that 45 days. So that way we'd give you like 75 days. And then that gives us more time to search for the correct property for you, the most optimal property. And the goal, even though there's three selections, really by the time we're making the three choices, we've already selected one, we're under contract on it. We're getting the reports back, or basically checking down the closing. Because the reality is if you choose one property, the second or third property, if you had to jump to those, if they're good properties, are probably under contract and gone. Anyway, you can't go to those properties anyway. So I do a soft search in the beginning, and as it gets closer, I ramp up the intensity of that search, and I save these properties to their file. Because sometimes they're a great property, but the cap rate's too low. But maybe like in 2 months, the seller will be more motivated to do a deal now than they were 2 months ago. So I save those properties in their file that might be a match. And I do a bunch of front work. So I have a LOI that we submit that has a confidentiality component in it, and I want to see the lease and the amendments and all that stuff before we ever go under contract. Because with a 1031 exchange, you can afford for some problem to happen and have a failed exchange. And also, it's different than apartments or residential. In triple net, each contract is different. So a commercial retail attorney on each side will have a custom Word document that's redlined back and forth. And that process usually takes a week and a half to 2 weeks. And that cost alone is maybe about $2,000 for that. And so you really have to allocate time to negotiate that purchase and sale agreement. From the time that we find the property and do the LOI to the time we close on the property, that's about a 60 to 75-day process.
Joel, you had said earlier that you have 21 years of experience. So I'm sure you've got some stories in there. with all your experience, was there a moment in your real estate journey that a deal went sideways or you had to pivot fast? Can you share one of those moments and what you learned from it?
Yeah, so sometimes, I mean, there's multiple, there's tons of stuff I've seen over the years. So for a client, one time there was an AutoZone, there was a ground lease. AutoZone built a building, and we did an updated survey before we closed on the property. But what happened is they built part of the side wall of the building on a utility easement that was underneath it. It wasn't supposed to be. And so insurance would insure the building. And so our options were we either had to take out part of the wall and inset the building, which that wasn't going to happen, or we had to get a variance that said from the city and also from the utility company that they were never going to, alter where that easement was there. And so we had to go to the city and file a request. Well, they didn't tell us that the mayor was retiring. And so when we got on the docket, they said anything that's not official city business, we're pushing to the next docket because the new mayor came in. And so the loan was almost about to come due, the fixed rate that my buyer was going to get with his 1031 exchange. And so we had to set up an agreement with the developer where the developer was going to give us hold 30,000 in escrow, so that, if my buyer's interest rate went up because we couldn't get it done in time from the adjustment, then we got that money to offset what he would have lost with the interest rate. Luckily, uh, we got the sign off like 2 days before the loan was supposed to close. We had to go on the city docket like 3 times. And that's one of my clients that owned one. Now, I have a property right now that is a very interesting one. So I bought a property a bunch of years ago with a syndication. We bought it at auction, and it was interesting. So they had a big mall there that was torn down, and an industrial developer built an Amazon where the old mall used to be. And so you had a road that went around, how you kind of drive around the circle around the mall, and you got the little smaller buildings around it. And so I bought one of those buildings that was right next to the Amazon. Well, after coronavirus ended, Amazon built all these new buildings, but the volume of deliveries, went down because people wanted to drive and get out now. And so they had like a skeleton crew there, but not a full building. And so when I tried to lease that vacant building I bought up, the tenants wanted to pay a super low rent because Amazon wasn't open yet. And they wanted to say, well, when Amazon opens, we'll pay you more rent. And I'm like, well, I'm not going to do that. I'm just going to wait and leave it vacant then, because I'm not going to sign something and you get the benefit with the low rent. And so what happened over time is a developer came along with a investment grade credit tenant, and their attorney reviewed all the title work. And when they were dissolving an REA association, if people don't know, it's kind of like a homeowners association for residential, but it's for commercial. It has easements and covenants. Like you can't have another paint store here if there's a tenant with another paint store in that whole mall development. And they were supposed to have dissolved all that, but there was a remnant piece that never got dissolved. And of course, it said you're not allowed to have a paint store. And this investment grade credit tenant is paint business. And so what happened is my title company missed it when I bought. I could have sued them because they missed it, but then I would have been involved in years of litigation. I would have eventually won, but it would have taken years. So what we've done instead is we filed a quiet title action, and we had to go to all the other owners, adjacent owners, to sign off to quiet the title. So you can file a quiet title action where it goes to court, and then that could take 5 or 6 months that way for it to eventually get dissolved. Or once you file it and the complainants are served, then you can get them to sign off on the letter early, where it clears the title issue, where you don't have to go through it's been filed in the court, but you don't have to go through the whole process. It takes longer. So where we're at now is they've talked with all their attorneys, and they wanted the language amended in the termination letter for the title issue, and they're fixing to sign off on that. And then this developer will then be able to close in about 2 months after that. So this one property that was next to the Amazon that I thought would go quick, because of this title issue, it's taken a couple of years with But the good news is we're making great money on it. It's still going to be a great return. So like all my deals, even where I had like some issue come up, I've made money on all of them. I've, my deals, I haven't lost money. I've always made money. It might be a single sometimes instead of the home run you thought you were going to get, but I've always done good on my deals. I'm real cautious when I buy stuff.
Mhm. Does that go back to what you were saying earlier about buying it for the dirt?
So the principle is they don't often talk about this, but there's business life cycles typically, right? So Walgreens been in business 100 years. That's an anomaly. There's only a handful of companies that last 100 years. Then there's another handful of companies that last 50 years. Typically, when you see a quick service brand that they go boom real fast and start adding these locations going throughout the whole country, and then they get bought out, they might have like a 20-year lifespan max or a 30-year lifespan. If you have the quality dirt in a strong suburban to urban core area, then even if that tenant goes out, say 15 years into the 20-year lease that you have with them, that area is still going to be supply constrained for land, and it's going to have high income, and it's going to have high population levels, and the tenants are going to desire to expand in those areas or move up to a bigger spot within that area, more dirt. And if you have the premium piece of land in the good location, your rents are often going to be way less for them than what it would cost a new developer to build like new construction, because they have to buy the land at that new higher price. They have to pay the market materials and they have to pay for the labor. So what often happens is if you have a building that's 10 or 15 years old, new construction, that tenant might have to pay $45 a foot on a lease for that developer to pencil and make profit on that. Well, if I bought it cheap enough for them to reface that building and go in, they could sign a lease with me for $28 a foot, and I still make like a lot of money on the upside, and they're paying like 12, $15 less per foot for their business while they do the same sales and make more profit because they're paying less rent, but they still have a strong location with great dirt. So um, that's what they look at. So that's why I'm always about the dirt. The dirt is like the number one thing in commercial.
Well, Joel, this has been such an insightful conversation. Before I let you go, if someone wants to reach out, connect with you, learn more about triple net deals or syndication opportunities, what's the best way for them to get in touch?
Yeah, the best way is the www.nninvest.com. And there's a form to fill out, start today on there, where we'll be in touch. You just fill it out, hit submit. And there's also 2 books, my personal life story that's in PDF, and also a book on triple net that's in PDF that they can look at. And they can also find me on biggerpockets.com. I'm a moderator on there, and I have over 15,000 posts where I've answered questions over decades of time on there. And I'm on a bunch of other podcast shows. I'm all over the place, basically. You go to my website, you'll see I have tons of video testimonials, picture testimonials. I've been doing this a long time. You can just go there and just read all the material. And when you're ready for a call to talk about your specific situation, just fill the Start Today form and I'll be in touch and reach out.
How you're not just building your own portfolio, but you're helping other investors succeed in this space as well. Thanks for dropping all this knowledge today, Joel.
All right. Appreciate it. Thank you.
And for our listeners, if you got value from this episode, make sure that you're subscribed to the Real Estate Pro Show. We've got more conversations lined up with operators like Joel who are crushing it in the real estate world. We'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.